In today's video, I'm going to be talking about Bitcoin. Now, as you probably know, Bitcoin price has been absolutely exploding over the last few months. I started trading Bitcoin back in 2017 in March, and the price per Bitcoin was around $1,200. To my surprise, Bitcoin ran to about 20K in late 2017, and then it had a downwards and sideways trending market all the way until our COVID lows in March 2020. With the full correction lows sometime in December of 2018 around $3,000. In mid to late 2019, Bitcoin had another run up from that $3,000 price back up to $14,000, where a lot of people thought it was going to run very, very hard after this. However, through the rest of 2019 and the beginning of 2020, we just had yet another pullback down to the below $4,000. Fortunately, if you bought Bitcoin at any point in time during this 2018, 2019, or beginning of 2020 bear market, or really any time in the past, you're significantly in profit now, as Bitcoin has run from those $4,000 prices to over $57,000 where we are today. So I'm going to take an in-depth look into Bitcoin, use some different tools and technical analysis techniques in order to predict where I think Bitcoin is headed and what the next best opportunity to buy actually will be. So if you're interested in this content, do me a favor and click that like button below and hit subscribe for future similar content. This really does help me out a ton, and it'll allow you to see very similar content to this one in the future as well. So let's dive right in. Now, if you've seen some of my previous videos, you know that the very first thing I like to do on a chart is just draw some simple support and resistance lines. These are going to be spots where price had trouble on the way up, and then maybe even used it as support on the way back down. To find these on my chart, I'm simply going to hover my mouse around key areas that I see, either peaks or valleys in the market, and see if they've also been affected in future times. So I think one of the more obvious ones is our 2017 highs in here, around $20,000. If I just hover my mouse in right here, you can see that when we came back to this price in late 2020, we hovered around this price again and struggled to break through it for quite a while. So I'll draw my first line into there, and then I'll zoom in just so you can see what I mean. We came right up to this pink line all the way over here in November of 2020, where we rejected and pulled back to about $17,500, a $2,500 pullback from those highs. And then finally, once we broke through it on this candle with significant volume coming right after it, that's when our major run started, up to $42,000 here before the next pullback, and now up over $57,000. So let's find a few more of these. I see another one right in here somewhere. It captures some of the movement throughout the end of 2017, the beginning of 2018, as well as the middle of 2019, our peaks in here. And then I see one more around here, around $10,000, where we had a little bit of resistance in November of 2017. We had huge support as we were falling, as our first fall from our December lows into here, where we bounced significantly off of it, about $7,000. And a bunch of support through here and resistance through here as well, and all throughout this area and this area and all through here and here. So clearly another significant line. And I think there's a ton more you could draw below these three support and resistance lines right in here. But I'm not sure the ones below this are actually important right now. I don't know if we're ever going to see prices that drop below this $20,000 support, or if we do even below this $10,000 support and resistance line ever again. This would be a pretty significant pullback from where we are now, up at $57,000. And if we do start to fall, we'll have plenty of time to start drawing the other support and resistance lines on our chart before we actually come down to them. So let's keep our chart pretty clean. Let's leave just these three on as in terms of $20,000 or low, and see if we can find anything in the upwards area here. To do this, I'm going to dive into just a 2-hour time frame instead of the daily time frame, so that we can see more data in this area, because this is only a period of about 2 months in here. So the first key zone I see is right around here somewhere, around $40,000. As we came up to it and rejected it in the first time in the beginning of January here, and then we came and tried to break through it and kind of hovered around it before we fell back down. And then we came up to this same level in mid-January for the second time right here and rejected down once again and fell about $12,000 after that. Came up to it once again in early February here, rejected, fell back down about $3,000. Finally, yet another huge breakthrough on huge volume, started another run from this $40,000 level up to where we are now. So let's get a couple more drawn in here. I see another one in here, got action all throughout all this area. I see another one right about here, which catches these highs and these lows through here. And then let's look upwards from here. I've got another one somewhere in here, which caught our first move up to 48,000, rejected us for a while in here before we broke through. And then I've got another potential line up in here, which hasn't been used as much so far, but I think if we get a pullback, it would be pretty significant because we rejected it on the way up. And when we broke through it with heavy volume, once again, we had another run. And then I've got another little one right in here, which had this little wick rejection through here and then support through there. If I zoom in, you can see that just a little bit better in here. So this wick rejection and then support all through this area before a run. So I think that's pretty good in terms of support and resistance. I think we've got enough on our chart, and I think if we start to pull back downwards, we can reliably count on one or many of these to hold our price action, at least temporarily, if not permanently, before another huge move upwards. So now that we have that, I'm back on a daily chart here, and I'm just going to use a couple different tools and techniques to see what I can predict out. The first one I want to go with is a Fibonacci Retracement tool. Now essentially what this tool does is you click it from one spot into another spot, and as the price starts heading downwards, these numbers tell you the percentage that we've actually retraced from the peak relative to where we pulled from. So if we have a price action move that looks something like this, and we use our Fibonacci Retracement tool from the bottom to the top here, as price starts to head back downward, something like this, if we reach this red line, which says 0.5, it means that we've retraced or pulled back 50% of the move from this bottom down here to the top up here. This is the halfway point between these 2 points. If you want to see more in depth about that tool, I do have a video covering it. You can go check it out. However, for now, let's go ahead and put some of these on our chart. I'm going to start from our very, very lows back in 2015, according to this chart. Of course, we know Bitcoin started much before that. And we'll just use this fib retracement and we'll pull to our peak up here in 2017. And I'm just going to go ahead and pull this one sideways. Now, just like with any other technical analysis tool or technique, the main goal of these is to actually fit the market in the past so that we can use it to predict the future. So what I'm looking for when I pull one of these fib retracements is to see if we've reacted at each of these Fibonacci levels as I have on my tool. And if we have, I'd expect us to react at the next one as well. So just with the pull here, I think it captures it decently. We do come down and this huge wick nearly touches this red 0.5 or 50% retracement, and we do bounce off of it a few times. We go right through this golden zone on this push down here, where the golden zone is between our 61.8% and 65% retracement. However, it doesn't really hold it too well. We're not exactly on some of these, so I'm going to try and play around with this fib retracement in the past here and just see if I can fit it better. And I think if we just pull it from our January lows in here, around $600 to the peak, this one fits our previous price action of this a bit better in here. So you can see that now on this first pull downwards right here, we come right to this 50% retracement, and we reject it and use it as support for quite a while before we fall down into here. Now we have a few wicks below our golden zone in here, however price action is holding inside of this golden zone decently well through here and here. So I like this fib retracement pull just a little bit better. Now, of course, this is in hindsight, and everything I'm looking at with fib retracement here is, of course, far in the past. However, I'm showing you this because I like to use Fibonacci retracements on the negative side above the pull to predict future price targets. Now, essentially, these negatives are just if you were to take this 0.236 retracement that we have here, or a 23.6% retracement, and flip it to the upside of the Fibonacci retracement tool. So instead of retracing the move from down here to up here by this 23.6% pull, we're taking this same value and we're putting it on top of the Fibonacci retracement tool. Now my three targets for this Fibonacci retracement tool on the negative side are this green negative 0.236 I have, this negative 0.618, which is the same as our golden line right here, but flipped, and then our negative 1, which is essentially just the same amount of price movement here, flipped back on top of itself. So let's see how some of these have actually impacted future price. I'm going to pull this sideways just a little bit more so that we can see how it reacted when we got to them. And you can see that our first kind of pause in the market on the way upwards, around $24,000, was almost directly on this green line right in here. We ended up breaking through it, however, we were running upwards from about $17,000 all the way up to $24,000, and this was a clear pause in the market as we went sideways for about a week in here. Next up is this blue target, and we definitely did go through this one almost directly. However, we did have a candle that tried to break down below right afterwards. So this wasn't perfect resistance in here. However, if you look at it, it actually does look like pretty good support, as we've tried to break below it many times, and we keep holding above this spot right here before our next push upwards. And finally, our third target on the negative side, this red line, this one wasn't exactly perfect, but it almost caught this move inside of here where we got to about $42,000. The line is right around $39,500. So this was a pretty good target. If you were to take a sell into here, then you could have bought back about $10,000 cheaper. But now, as we're seeing, this Fibonacci retracement pull is no longer as useful. We've already gone to and through each of our three targets, so let's try and use a different fib pull. I'm actually going to move over and use a more local fib pull here. So I'm going to start from these lows in here, around $16,000. So when we tried to go up to $20,000, this was our first somewhat big pullback, around 25%. So let's use that as our low and our push upwards towards that $40,000, which we already know was significant. We saw it in our previous Fibonacci retracement pull. Let's use this high as our top click here and pull this one sideways. Now, once again, before we try to validate any future price action, let's make sure that the Fibonacci retracement pull was actually significant on the way down. And you can see this huge wick that we had on this daily candle right here. It actually rejected this 38 almost perfectly. Yeah, we wicked below it a bit in here, but then on the previous two candles, we also wicked this same 38% again, and we held above this line before pushing back upwards as a retest to $40,000. Finally, when we came through it, we had a couple wicks that came almost perfectly to this red line in here, our 50% retracement. So this, again, looks significant. Let's see how it affects our targets in the future from it. As I said before, this green line, this negative 0.236, is our first target. And it should be pretty clear that it used resistance on this green target for many days in a row here. It struggled to break above it on almost all of these candles for about a week straight at $48,000 here, before finally we broke out, and we broke out heavy above it. So this first target was definitely significant. It stopped our major move up from this $29,000 low up to $48,000 in here. And finally, when we broke above it, look at exactly where we have paused now. We have all these huge green candles going upwards, and finally our first rejection candle right at this $57,800 negative 0.618 target. Now, it's too soon to say if we're going to reject at this target and end up going downwards, because our daily candle is actually testing this line right now as I'm recording this video. However, one thing we can say for sure is that this line is definitely resistance, and so let's put a box in here just in case. Just by using this target alone, you could definitely sell inside of this box and look for a pullback, maybe to one of these pink lines that we have drawn, either $5,000 down here or another $7,000 lower to here, or even a huge fall all the way down to about $40,000 here. However, let's try and get more confluence on this. Let's not just use this one target that we have. Let's see if there's anything else we can add. For now, I'm going to turn this Fibonacci retracement pull off of my chart just to keep it clean. We have this box here that lets us know that, hey, maybe this is going to be a rejection. So next up, let's try and put some geometry on this. I personally really like to use pitchforks, and if you've never used them before, I do have an in-depth tutorial on how to use pitchforks, how to find targets with them, and all of the variations of pitchforks. But just as a quick overview, what you're going to want to do is find 3 significant pivots in the market, and you'll click on each of these 3 pivots. And once you have it, the geometry of the market should be framed inside of this pitchfork. Again, you'll want to use past data to see if it's reacting at each of these key spots of the pitchfork, such as the lower parallel, the upper parallel, and the median line of the pitchfork. And more often than not, these blue dotted lines in the middle right here are going to be significant as well. So let's use the same 3 pivots that we used for our Fibonacci retracement pull, which the first one is down here, the second one is up here, and then the third one we had down here. Now, in terms of this third pivot, I think you could definitely use either of these 2 lows here. So we're going to play around with it and see which one of the 2 actually fits better. Again, we're trying to frame the past movement of the market in order to help us predict future movement. Just by looking at this first one here, I actually think it does a pretty good job. When we come up on this same candle right here, we're rejecting this blue dotted line in here pretty well before a huge breakout up to around our median line, which supports our price upwards in this direction for a bit before we get up to the next blue dotted line on this candle, rejected for just a little bit before we push upwards, and maybe now heading towards the top parallel here. Let's see how it compares to our secondary pivot in here, and it's going to be very similar because we've barely moved this. And it might be too soon to say, but I think I actually do like this secondary pivot just a little bit more. We have the same reactions around this blue dotted line in here before I push upwards. However, some of these wicks actually capture this median line just a bit better. They're almost perfectly on the median line as we come downwards and try to break down below. So it uses as really good support through here, as well as both of these candles in here are right on this blue dotted line. And so I think I have a slight preference towards this one. We can also see that our box that we previously drawn is coming in contact with this pitchfork almost perfectly where we have it right now. In other words, we're now finding a key point of confluence between our pitchfork and our Fibonacci retracement pole right inside of this smaller box right here. So I'm going to adjust the box to be smaller in here, tidy up our target just a little bit, and remove that larger one in here. So now we have two pieces of data that are kind of agreeing that maybe the Bitcoin price is going to hit some sort of peak inside of this area right here, at least in the short term. A couple other boxes I want to go ahead and draw on my chart are where our previous support and resistance lines are actually meeting the median line of our pitchfork, because maybe when we pull back, these are going to be the spots that we actually find support in. So the first one is this little box inside of here, where our median line and this pink line meet up, and the second one is right up in here. And lastly, I'm going to draw even on the bottom parallel right here, just in case we have a longer delayed pullback. Let's put in some little boxes inside of these as well, just so we can remember where these are and remove our pitchfork from the chart to keep it clean. Now, it's of course possible that our support and resistance line and this lower dotted line right here actually are where we support the price. However, for now, I'm going to leave just these few boxes and I'm going to hide my pitchfork. I'm going to hide it so that later on I can actually just pull this out of my object tree and look at how it's framing the market in the future. So if we start to pull back, I'll definitely put this back on my chart and watch some of these boxes along with the pitchfork itself. The next thing I want to take a look at is volume. Typically, as price is going upwards, you'd expect the peaks in volume to keep increasing. It supports the idea that you have a bullish movement and that bulls are buying into the price action that's going upwards. Now, one thing we can see is that each of these peaks in volume are actually decreasing in Bitcoin. So we have this volume peak in here, it goes down to this one in here, and then this one later on. And these are correlating with three of our large green pushes upwards, or attempts to push upwards in the case of this one, with this candle right here, this green candle right in there, and then this one right through here. You can see that the latter of these two are the major green candles, and you can also see that this green candle is much bigger than this one in size. This one covers about $9,000 in price, and this one only about $6,000. In other words, we see that volume is decreasing and also the depth of these candles is decreasing. This is not something I would strictly trade off of, however, it is giving us a little bit more confluence that maybe a short-term peak is about to be in for Bitcoin. The bullish volume is dying off, the bullish price action is dying off, and along with those two things, we know that we have a ton of confluence right inside of this box right here, suggesting that maybe a short-term peak will be put in. Now, this is not to say that I'm not bullish on Bitcoin and that I think it's not going to go much higher, because I definitely do think this is going to keep running and running. And after trading the 2017 Bitcoin run, I will say that anyone who tried to predict the peak or the end of that insane move from just a couple $1,000s all the way up to $20,000 was typically wrong. It was really hard to predict in hindsight. And so I'm not even close to saying that I think the end of the Bitcoin run is close. As a matter of fact, with all the retail buy-in, with all of the news hitting it right now, I think we're just in the very beginning stages of where the future price of Bitcoin can be. And I would not be surprised if this runs upwards of $100,000, even on this just one run right here. However, as we start to push towards that price, there are going to be major pullbacks in the market, upwards of 10, 20, or even 30% drops. Now, if you're just holding Bitcoin long term, you can absolutely hold through these drops. And personally, that's something that I'm doing as well. However, if you want to try and trade off of this, the volatility actually presents quite a good opportunity. As we reach some of these key levels, you can take off a portion of your trade and then try to rebuy it later on. If we start to see some sort of rejection in this box, I would not be surprised if we pull back to either this $52,000 level into here, or even all the way down to $48,000 over the next week or two inside of here. We've had a pretty crazy run from $28,000 all the way up to $58,000 with very little pullback through this area. So this would not be a crazy thing to predict. One of the things we can do to predict the short-term pullback is use our Fibonacci retracement once again. So we'll pull from that same low that we were using before up until, let's say, the middle of this box we'll predict. Now, some of the more common spots for a pullback are this 50% retracement, this red line that we have, or this 61.8% retracement. However, sometimes in a bullish market, we do only get a pullback to the 38% retracement, which is this blue line right here. So that would have me leaning towards this box that I had previously drawn, and we'll expand it just a little bit to include this in it. So maybe we're going to peak in this $58,000 range just for the next week or two, get a little bit of a pullback in here, similar to how this one pulled back from about January 8th all the way down to about January 22nd. Maybe we'll do the same thing into here, into middle of March to around $47,000. One thing I'd be looking for inside of this pullback is this ABC structure. And I won't go too into depth into Elliott wave in this video. However, this ABC is what signifies a correction. Essentially, the market trends upwards in waves of 5s and corrects in waves of 3. This is the basic premise behind Elliott wave theory, and in my opinion, one of the best ways to predict long-term price action. You can see inside of this pullback right here that we have one push downwards, an attempt to go back towards the highs, and then a final push downwards into here before we headed upwards. You could label this as an A with the initial push downwards, a B, which has the objective of breaking the highs of that A and continuing the uptrend, but it gets rejected and fails, and then a C, which puts in our actual lows of the pullback before we head upwards. So I would definitely look for the same sort of thing inside of here. Maybe we get a quick A at this $50,000 or $51,000 pullback into here, a B that tries to continue our uptrend, and then a C that is actually our real push downwards down to here around $48,000 to $47,000. If you see something like this happen and you're not already in Bitcoin, I think this is definitely the next best opportunity to buy. And if you want to take some profit off in this area and shoot for a trade like this, I think you definitely could. Now, if we start to break significantly above this, and you want to make sure that you're still holding a good long-term position, definitely put some sort of stop loss on it. Maybe if we break $60,000, you put a stop loss because it's possible that we continue upwards to the next target of our Fibonacci retracement that we had from before. So if we just put our previous Fib retracement on the chart again, as we know, we're at this blue target right here. It's possible that we just break completely through this and we don't reject it at all, and we go upwards towards this red target in here, which we used once before as a really good target, around $68,000. That would be the next target to the upside here, and I think if we do reach that, that could be yet another really good opportunity for you to take some of your trade off right here and rebuy it a bit lower with this same ABC structure, maybe a pullback even deeper since it would be a run from about 29,000 up to 68,000 without any sort of pullback if we don't pull back here. And so maybe at that point you could even buy back in somewhere around this $53,000 price. So now one more thing, where do I think the future price of Bitcoin will actually go to? In our previous run, which started around the middle of 2017, I'd say the lows somewhere in this area was a key spot before our huge spark. From that low up to the top in here, let's take a look at how much our 2017 run actually ran. So if we just pull a price range tool, which is just going to capture the percentage movement from around this March low in here, which is an area that we retested for quite a long time. You can see we hovered around the $600 to $1,000 price range for a while. So let's start our price range tool from here, and let's pull it to the highs up in here. Now you can see that this was about a 2,100% run from about $800 up to about $20,000. So just for the sake of it, let's see how the 2,100% run would look like from our March lows in here. I'll use the same price range tool and click from in here, and we'll just drag this upwards. And you can see that if we get another 2,100% run, it should bring us up to about an $85,000 price target on Bitcoin. So if we just simply get a repeat, which tends to happen a lot in charts and in history, as we know, I think an $85,000 price target for Bitcoin is actually completely reasonable just on this run right here. Now, as I said, we're going to get some of these ABC pullbacks as we go up towards this run, and if you zoom into this movement in here, you'll see the same sort of pullbacks. Now, one thing to note is that we didn't have any sort of retail buy-in during this 2017 run, so I think it's definitely possible that this 2020-2021 run will actually be even stronger than the one in 2017. And so personally, I think it's actually completely realistic to say that we could test $100,000 on Bitcoin before we get any sort of major pullback like we had after 2017 into 2018. Now, where will that major pullback actually head towards? It's hard to say right now without seeing the price action and without actually getting to this target, but a 50% pullback of that entire move would definitely be possible. So as a quick summary, if you're looking for a short-term trade on Bitcoin, I think it's definitely possible that we're peaking in this $58,000 range before we pull back maybe $10,000. However, if you're just a long-term holder or you're looking to long-term hold Bitcoin, I think buying on that first pullback that we get could be a really good opportunity for a hold to at least $85,000, but would not be surprised if euphoria and retail buy-in brought us all the way up to at least $100,000 on Bitcoin. So once again, if you like this video and you want to see similar content, do me a favor, do yourself a huge favor, click the like button below and hit subscribe for future similar content. And also, if you want to trade crypto, options, stocks, anything with me, I have a link to my Discord in the comments and description below. Feel free to click it and come hang out with us. There's hundreds of traders that are trading together every single day, running ideas by each other, and it's overall just a really good community to help you learn to become a day trader. So with all that being said, I hope you enjoyed this video, I hope you learned something, and I hope you're long Bitcoin and have enjoyed the price action we've seen so far. Thank you so much for watching, and as always, good luck trading.